Well, the Australian dollar was already rising when the monthly inflation numbers came out because the US dollar was falling. And it's currently at 65 US cents for the first time in a week. And that's because the jump in the annual inflation rate to 3.8% was not good. And it means there won't be a rate cut next month. And in fact, it's starting to look like the next move might be up, especially with the core inflation rate that the Reserve Bank keeps an eye on going to 3.3%, well outside the 2 to 3% target range. The share market went up for the third day in a row. Online retailer Temple & Webster had a shocker because sales were up 18%, which was less than analyst expectations of 23%. And God help you if you disappoint the analysts. Meanwhile, retailers with actual shops, like Woolworths and Wesfarmers, did okay. Global stocks rose, led by another rise in New York. And the oil price fell because of reports that Ukraine might agree to a peace deal with Russia, which would bring Russian oil back into the market. We also got construction data from the ABS today, that is the value of work done in the September quarter, which was up 8.5% on last year for residential construction, although that's value, not number of houses, so it's largely due to rising prices. And as you can see, the big picture is that it hasn't really changed for 10 years. And as a result, the time it takes to save a deposit for an average house has hit a new record high of 10.9 years. Now, AMP works this out as somebody saving 15% of the average wage. Before the year 2000, when the capital gains tax was discounted by 50%, it was 4 or 5 years. Now, it's basically out of reach. And that's finance.